In today's discussion, I'll be delving into recent developments surrounding MMTLP and potential illicit activities by banks in South Korea. We'll also explore the implications of synthetic shares and their impact on AMC, along with an analysis of Adam Aron's role amidst the ongoing financial drama. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But everyone remember, this is not a financial advice video. Firstly, let's focus on MMTLP, where recent revelations regarding synthetic shares have come to light. According to a tweet by Junk Savvy, MMTLP shareholders have validated 194% of TradeStation allocated registered stock certificates. This discrepancy arises as TradeStation official allocation was 122,000 shares, yet they currently hold over 237,000 shares. This reveals a significant overage of 99 million MMTLP shares held by survey respondents through 6364 accounts. The data, collected on January 3rd from 74 financial institutions, unequivocally indicates a surplus of 194% more shares than officially allotted. This information prompts the question of whether other brokers may also be holding more than the allotted 194% of shares. Kristen Shaughnessy emphasizes this concern, wondering which broker will be the next to confess to selling counterfeit shares to MMTLP shareholders. The discrepancy between the official allocation and the actual number of shares held at TradeStation raises suspicions and leads to broader speculations about the legitimacy of shares across various brokers. This revelation follows a recent incident where TradeStation apologized to customers for the inability to move shares through AST, citing an insufficient allocation from the DTCC. The DTCC communicated that TradeStation only had an allocation of 122,000 shares, yet the platform reflects over 237,000 shares. This discrepancy is attributed to the prevalence of additional synthetic shares being traded and purchased by retail investors on TradeStation platform. Building on this, Kristen Shaughnessy questions which other brokers might admit to holding more shares than allocated by the DTCC. If MMTLP float is sold at least twice over in synthetic shares, the implications for other stocks, such as AMC, come into question. Comparatively, AMC, with 4 million individual shareholders, potentially faces a more complex scenario than MMTLP. Although the exact number of retail investors in MMTLP isn't readily available, it is estimated to be between 80,000 and 200,000. This comparatively smaller number suggests that AMC float may have been sold many more times over than MMTLP. Shifting our focus to South Korea, there are reports of possible naked short selling by foreign banks. Kristen Shaughnessy highlights that the South Korean financial regulator is set to release details of its investigation into naked short selling by foreign banks. BNP Paribas and HSBC have already been fined over alleged naked short selling. Speculation arises about the potential involvement of other major institutions such as Goldman Sachs, JP Morgan, Citadel, and Virtu in similar practices. The discussion then shifts to a tweet from the presenter, challenging the narrative that Adam Aron is working for hedge funds. The tweet argues that if Aron were aligned with hedge funds, AMC would be bankrupt within 7 days. It suggests that Aron actions, particularly in preventing accidental defaults on loan agreements, showcase his commitment to building AMC into a profitable business. However, concerns about dilution are raised, acknowledging that Aron may be acting in the best interest of the company but not necessarily the shareholders. The tweet speculates on the misalignment of interests between AMC as a company and individual shareholders. The presenter engages in a Twitter exchange, addressing criticisms about AMC's share value drop after a reverse split. Sarcasm is used to dismiss the idea that Aron controls Ken Griffin decisions, emphasizing that external factors, such as market manipulation, play a significant role. The narrative core update raises questions about the shorts' behavior in not fully capitalizing on their profits despite AMC's substantial decline. Practical Stocks adds that the legally disclosed short interest is still rising, indicating a persistence in short positions rather than profit-taking. The potential motive behind this, as suggested by the narrative core update, is a desire for bankruptcy to avoid covering the counterfeit shares. An interesting tweet from Soika highlights missing FTD, failure to deliver, dates for AMC in November and December. The presenter notes that there are gaps in reporting FTD data, raising questions about what transpired on those days and whether there were significant FTDs. In conclusion, the intricate web of synthetic shares, potential market manipulation, and regulatory investigations in both MMTLP and South Korea raises concerns about the integrity of the financial system. The ongoing saga around AMC, Admiral Roll, and the persistence of short positions add further layers of complexity to the evolving financial landscape. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.